All right. Welcome to the NJCPA Tech Talk podcast, brought to you by the Emerging Technologies Interest Group. I'm your host, Sean Stein-Smith, and I am back here today for episode 5. And I have a awesome guest talking some really timely, really intense topics, trying to merge tech, tax, and all of that awesome stuff to do with Bitcoin also. So, but before we get into that, just a quick background on me. I'm Dr. Sean Stein-Smith, your host, and I'm very hands-on in the blockchain, crypto, emerging technology space, as it has to do with accounting, finance, markets, all the rest. I have a column at Forbes every single week, so always be sure to check that out. But that's enough about me, and I'm joined here today, Shehan Chandraskera, who is the head of tax strategy at CoinTracker. I'll come back to that. Who's also a Forbes crypto blockchain uh, columnist, is also a rock climber, which I found out from actually tuning into your episode on the Green Apple podcast. And you're a Twitter master. Shehan, welcome to the show.
Yeah, thanks for having me.
So just a quick sort of background of you and your firm. What does CoinTracker do actually?
Yeah, so CoinTracker is pretty much a tool that helps you reconcile your crypto capital gains and losses by connecting your wallets and exchanges into it through an API.
Okay, so it's basically a sort of accounting tax back office tool to help us get a handle on their potential tax obligations.
Correct. Like for example, say that you do stock trading in 3D Ameritrade or JP Morgan. Things are easy because at the end of the year you get this form 1099 listing your sales price, cost basis, and the gains and losses, and that goes directly into your tax return. However, if you work in crypto, it becomes your responsibility to figure out the cost basis because none of the exchanges are giving you that cost basis information that are vital to figure out your taxes. So CoinTracker is a tool that helps you reconcile all your transactions between hundreds of wallets and exchanges. And then it just generates all the tax reports that you need so you can file your taxes.
So it would strike me that you're probably uh, pretty busy right now, right?
Yeah. I mean, I'm still practicing, a little bit of, in the public accounting, the service side of things. So
Mhm.
that is busy. The software companies are busy as well right now because, most of your users are coming right now because for most of the people, taxes is something that you focus on only from, January through April. But this year it's an exception. It got extended to May 17. So there's a huge amount of traffic that goes to all these software companies, between these,
Mhm.
3-4 months period.
Sure. All right. So with that introduction sort of out there to add some context, right, to any folks tuning in who aren't as intimate with the blockchain crypto space and all that, now we can actually dive into some of the questions that I had drawn up that I think really are going to add some real value to our folks tuning in here. So in terms of sort of the update as to the trends, the hot topics that are going on out there in terms of crypto assets, are there any trends that are ultra high profile outside of sort of the buzz around Bitcoin, obviously?
Yeah, I think in 2021, I think we saw a huge interest that was building around NFTs, non-fungible tokens.
Mhm.
There was a record sale. This artist named Beeple sold his NFT for $69 million. And then there were some other very noteworthy sales. There were like New York columnist. He sold his one of his New York newspaper columns like I think $650,000. So yeah, NFTs are pretty hot, and that market is continuing to grow with a lot of celebrities coming in, and
Mhm.
people are trying to tokenize things in this virtual world
Mhm.
and assign value to it. So NFT, I would say that's like the most hot topic right now.
Mhm. So what exactly is a NFT, and how is it different from uh, other cryptocurrencies like Bitcoin, Litecoin, Ether?
Yeah. NFT, by the way, it stands for non-fungible tokens. So it's pretty much a digital representation of something with limited supply,
Okay.
or could be a art piece. So if I have this art piece, or like a classic car or something like that, I can convert that to an NFT, and somebody can have ownership of that asset virtually, and there's only one of that kind of asset. So that's pretty much an NFT.
So, and I know that the two of us have both sort of written on this topic previously, but a question that I've been asked quite a bit is, if all that I have is sort of a virtual copy of an image, of a picture, of a uh, entertainment clip, how do I actually prove that I own that? And then actually part two, what do I actually own?
Yeah, I mean, again, those questions are still there, and
Yeah.
I think we're still in the beginning. I think for me, the idea here is that once you can earn these very rare and scarce asset digitally, you can actually figure out ways to monetize them.
Mm,
Like, say for example, you could collect these in NFT art pieces, and in 10 years from today, you could have this virtual art library where people can come in to see these artwork, and then you charge an entrance fee. There could be another situation where you collect these NFT, I don't know, game characters, and then
mhm.
you put them in some type of virtual environment, and then again you create value through that. So I think we're still in the beginning phases of NFTs, although NFTs is nothing completely new. I think it started with CryptoKitties in 2017, where you could create your own type of CryptoKitty, and then it kind of died off. But in 2021 it just sparked again out of nowhere. Again, it's not perfect yet, but
Mhm.
I see a lot of future there. It's really hard for us to understand what it could be because we are so early. And it's the same thing if you ask me, okay, what would Bitcoin be doing in 2020? If, and we wouldn't know the answer if you ask that question from me in 2011 or 2012.
No, and excellent point there, right? Because the whole conversation is still in the very early sort of parts right now.
Yeah.
But in terms of an area that is more sort of up your alley, right? What's going on with the crypto taxes? Because there's been a whole bunch of conversation. I would say really since going back to I guess the end of 2019, and then all the way in 2020, and then into 2021, there are some updates from the IRS that had answered some questions, created other ones, and then there was that whole thing about now having to ask every single taxpayer, did they transact in crypto? But it's not quite as clear as it might seem, right?
Yeah, I think the biggest highlight in terms of tax was that starting 2020, IRS put that virtual currency question on page 1 of Form 1040. So pretty much everybody in the US who's filing a Form 1040 has to answer that question. There were a lot of questions surrounding that virtual currency question because IRS didn't provide a lot of instructions.
Hmm.
Um, in Q1 2020, IRS informally came in and released some guidance saying that if you only purchase cryptocurrencies using US dollars, you don't have to check yes on that box. That itself is kind of self-contradictory because the question is asking, did you acquire any financial interest? But again, you could say no if you just purchase cryptocurrency using US dollars according to this newest guidance. So yeah, that question is there again. It's pretty much there to kind of signal the taxpayers that IRS is thinking about this issue very seriously because the compliance in this space is super low. So that was a major highlight. And then from the information reporting point of view, I know that IRS is working on kind of introducing a more robust information reporting system for
Hmm.
exchanges, because right now these exchanges issue different types of forms ranging from Form 1099K to Bs to 1099 miscellaneous, and that actually confused the taxpayers. And taxpayers, get one form this year, another form next year. They don't know what to do with it. So hopefully, 2021, meaning in 2022 tax season, we'll see more robust information reporting system in this space as well.
So it kind of strikes me as there is still quite a bit of ambiguity and uncertainty almost as to sort of what types of data you as a individual crypto trader are going to have to actually file taxes, correct?
Yeah, I mean, I think the data is there, but then a lot of taxpayers don't know if that's their responsibility to gather all that information. Because if you trade in stocks and security or in a traditional finance world, it's not your responsibility to keep books and records of what you're trading. At the end of the year, as I mentioned earlier, you get this form 1099B from the brokerage service, and you just put that into the return. But in the crypto world, it doesn't happen. So some taxpayers don't know that it's their responsibility to keep track of it. And some taxpayers do know, but then, they cannot do it accurately because these transactions are, very frequent and, highly complex. And at the same time, some taxpayers are, trying to evade taxes because there's no robust 1099 system. So there's a lot of ambiguity. And inside that ambiguity, some people are trying to exploit that. But yeah, I mean, again, it's a new space, so we are all evolving.
Yeah, and I mean it is really changing extremely fast. So are there any common pitfalls, common errors that are being made in terms of having to prep taxes, like the whole sort of 1031 option for crypto, which isn't really a option actually, but are there any like top maybe two or three errors or areas that are still tripping up taxpayers now, even in trying to prep 2020 taxes?
Yeah, I think the biggest pitfall that I see among some taxpayers and also tax practitioners is that, you know, they get overwhelmed with these, transaction history reports that are issued by the exchanges, because they had to go line by line and, kind of figure out the transfers, what's taxable, what's not. They had to assign the FIFO, LIFO, HIFO tax load ID method. But just know that there are tools like CoinTracker that helps you automate that. So don't think that just because you have a crypto client, you had to assign a team of associates to kind of reconcile those transactions and generate the form 8949 and schedule D. There are tools that can handle that. So that's one thing that I see. The other thing among taxpayers is that some taxpayers think that I didn't realize any cash, therefore I don't have to pay any taxes. That's not the case. Like you mentioned, when you go from one cryptocurrency to another, say that you are spending Ethereum to buy Bitcoin or vice versa, that creates a taxable event, and IRS doesn't really care whether you receive cash or not. So that's a huge misconception that's still going on right now. And that 1031, property to property exchange is no longer applicable to crypto. So I would say those are the two big misconceptions that I'm seeing today.
So would it be fair to, if you were trying to have a conversation with a firm or a external client who was kind of new to this whole space, it would be to treat crypto transactions as if you were trading equity? Would that be fair?
Yeah, I think that, if you're new to this space, and this is, I tell this, throughout my webinars, like if you don't know anything about crypto, I think the cheat sheet for you to remember is that crypto is treated very, very similar to stocks and securities. You have a purchase price, you have a sales price, the gain or loss is capital in nature. And then that goes to Form 8949 and Schedule D. So that's at a very high level, it works very similar to stocks.
And are all crypto assets treated the exact same way, from Bitcoin, NFTs, privately issued coins, tokens, stable coins? Are all the crypto assets treated equally?
Yeah, so right now IRS hasn't made any distinguishment between different types of assets, because when they first came up with guidance in 2014, we only had Bitcoin and a couple of other more prominent cryptocurrencies. So because of that, right now, according to the IRS, all virtual currencies are treated as some type of property. So that includes, coins like, Bitcoin, Ethereum, and that also includes stablecoin, again, because IRS hasn't said anything specifically about stable coins yet.
Mhm.
Now, in the case of NFTs, those could be slightly different because I actually wrote about it in my Forbes as well. So NFTs could be actually treated as collectibles. And that does have different tax implications than you were just trading a property, because collectible tax rate, the highest tax rate is 28% versus 20% that's subject to stocks and securities and regular crypto coins.
Interesting. And is there any indication, are there any hints that the current White House and current Congress are going to start treating crypto differently going forward? Because I do know that there has been some conversation about changes to the uh, corporate tax code, individual income tax code, but have there been hints or any conversations on how crypto taxes could actually fit into these other conversations?
The only conversation that I'm aware of is the introduction of that de minimis rule.
Mhm.
In other words, right now, even when you spend like a crypto to buy a cup of coffee, that triggers a taxable event, because essentially you are disposing of a property, and that property has a cost base and a market value, and you got to pay taxes. The problem is it just doesn't make any sense. So there have been some conversations around introducing a de minimis threshold. I think it was around $600. So in
Mhm.
any year, if you made a purchase below $600, again, we don't know the specifics. I don't know if that $600 is applied per transaction basis or annual basis, but they're talking about introducing a threshold, and if your transaction falls below that threshold, you don't have to pay tax, so that transaction is excluded. So that's the only crypto specific law that I'm aware about.
All right, so it's going to be interesting to watch that going forward. And so, are there any crypto forecasts, crypto predictions that you would feel comfortable trying to make for the duration of 2021, right? In terms of the end of year price for Bitcoin, other trends, items like that.
Yeah, I think again, I'm not somebody who looks at the price every day, because I think
Come
it's a
on, come on,
distraction.
you do, come on, you do, come
No,
on. It's
I
okay.
don't look at the price.
It's only us here, Shehan. No one's gonna know.
I don't look at the price of Bitcoin, but I do look at my portfolio. So is that two different
Okay.
things?
Okay. Fair enough.
But I think based on what we are seeing, I think there's a big likelihood that Bitcoin going to surpass that 100,000 or six-figure mark, because right now it's trading at 50,000. So you only had to double, with all these corporations coming in, all the celebrity endorsement, and and then more education. I think we're going to see a new wave of people coming in
Mhm.
and driving the prices high. Um, but it doesn't mean that it's going to stay at 100,000 for the next 10 years. There could be fluctuations, which is which you should be completely fine if you're coming into the space. But if you zoom out and look at the trajectory, it's an upward moving trend, and it has been the best performing asset class for multiple years, in my opinion, based on some research, and
Mhm.
especially the best performing asset class in 2021. Um, so yeah, just only invest what you're willing to lose, and just know that your upside is unlimited. Your downside is always limited to what you invest.
Excellent points there, Shihan. And are there any other tips or tactics or sort of recommendations that you would make to either individuals or firms that are trying to get more involved in blockchain and crypto, but haven't done so quite yet?
Yeah, I think this is a question that I get all the time. I mean, a lot of CPAs, who attend my webinars, are like, okay, how do I get to know more about crypto and taxes and everything? I think the most logical thing that you can do, and this is the best way to learn, is just by investing. You don't have to invest, thousands of dollars. Just open up a Coinbase account, invest $10, $20, and see how things work. And then once you understand, how things work from a non-tax point of view, because your experience when it comes to applying other tax rules and doing so many tax returns and etc., it becomes easier and easier for you to kind of understand how taxes work for cryptocurrencies. Again, it's not rocket science. It's treated very similar to stocks and securities, with some minor exceptions and some complexities. But my recommendation is, if you want to have like a niche, find out these people who are more tech savvy, and then, as a firm, just invest a little bit of money in crypto and see what happens, and learn from it.
Absolutely. The best way that I find to learn something is to be hands-on. So
Yeah.
excellent tips there, Shehan. All right. And Shehan, thank you once again for being here today on the podcast. Now, for any of you folks tuning in here right now, be sure to sign up to the NJCPA Tech Talk podcast in your favorite podcasting app. Watch on YouTube at youtube.com/NJCPA. Watch online at njcpa.org/Tech Talk. And for NJCPA members, join the Emerging Technologies Interest Group at njcpa.org/groups. Shehan, awesome time having you on. Thank you again.
Thank you.